Canada is no longer just playing defense. It's using its $1.77 trillion pension arsenal to fight back against US trade pressure, starting with Wall Street. The top 8 Canadian funds, known as the Maple 8, are pouring billions into US assets, or pulling back, depending on how trade talks go with Trump. Nearly half of Canada's largest fund, CPPIB, is invested in the US, over $500 billion. That's massive leverage. And it's now being used as a strategic bargaining chip. Canada's trade negotiators have made it clear, play fair, or we'll take our money elsewhere. And in 2025, they're following through. By April, Canadian giants like CPPIB and CDPQ began pausing investments in US private markets, citing political chaos and loss of tax perks. Some US deals were straight up rejected. CEOs said they'd come back in 6 months, or demand deep discounts. At the same time, CDPQ and Ontario Teachers slashed private equity spending and froze direct investments in Europe. The message was clear: Canada's rethinking where its dollars go. This hurt the US M&A scene hard. Canadian funds were once major players. Now, deals are drying up and prices are dropping with fewer bidders at the table. CPPIB alone had committed nearly $50 billion to US private equity by late 2024. Those deals are now stalled. And that's bad news for startups relying on that cash. Take Hudson Yards in New York, a $25 billion mega project. It's backed by CDPQ and OMERS. If they pull back, the funding gap could delay construction and scare off tenants. Canadian withdrawals are tanking US deal volumes. And while fewer deals are happening, the ones left are more expensive. Canadian funds offer long-term, stable money. US companies loved it. But now, they're stuck turning to banks with brutal interest rates, 7.8% to over 10% for small businesses. Worse, tight bond markets mean even giants can't easily raise money. That forces them to slash plans, raise costs, or fail. It's already happening. Pattern Energy in California got billions from CPPIB to build wind farms. If that vanishes, they're left with crushing bank debt. Same with a Boston biotech firm that once raised $30 million from OMERS. Its next round delayed. They're surviving on an 11% bridge loan, barely. This retreat triggers a domino effect. Tech, healthcare, real estate, sectors built on capital, are now gasping for funds. Higher borrowing costs mean higher prices. Fewer M&As. Slower growth. US companies lose their edge, and fast. And guess who's watching it all play out? Canada. CPPIB plans to hit $1 trillion in assets by 2030, and it's pouring more into infrastructure, renewables, and domestic growth, not US real estate. In fact, CPP dropped investments in US malls and office buildings in places like New York and Chicago. Instead, they're building green housing and transit hubs in Montreal and Vancouver. CDPQ's doing the same. $13 billion is going to the UK, Germany, and France, especially into clean energy and transport. Even India is on their radar. CPP just increased its investment in NHIT to nearly $1 billion Canadian. That's diversification with a purpose. Meanwhile, back in the US, housing prices are spiking. Why? A 20.56% tariff on Canadian softwood lumber, 3 times what it was before. This is a self-inflicted wound. American homebuyers are the real victims. The US Lumber Coalition claims this is about fairness. But the America First spin is backfiring. They say Canada's subsidizing its lumber. That argument has been debunked repeatedly, by NAFTA, by the WTO. Yet here we are. And now Canadian lumber producers are being hammered with countervailing duties that could push tariffs over 30%. The cost? Construction delays. Higher home prices. Shrinking margins for builders. And fewer homes built, just when America needs more. Meanwhile, Canada's finally flipping the script. Instead of complaining, they're considering export quotas. If the US wants lumber, it'll be on Canada's terms. Even US senators are now pleading with Canada for a deal, proof that Canada's no longer the underdog. It's a negotiating force. The lumber war is decades old, but Canada's new approach is reshaping the power dynamic. And it's not just lumber. Aerospace is the next battlefield, and Boeing is bleeding. In May alone, Airbus delivered 53 planes. Boeing, just 24. China's halted Boeing orders after Trump's latest tariff threats. Hundreds of planes are stuck in limbo. Storage yards are filling up. Airbus, meanwhile, is cashing in, racking up record orders and expanding its market share. Trump's fury over Boeing's Mexico expansion led to a 200% tariff threat on aerospace parts. That sent US suppliers into chaos. American towns built on aerospace are seeing contracts vanish and jobs disappear. Mexico, meanwhile, is booming. Querétaro alone now handles over half of Mexico's aerospace exports. Airbus, Bombardier, and Safran have built a fortress next door, and Boeing's using it too, despite Washington's rhetoric. Even Air Canada is now eyeing more Airbus planes. The damage to Boeing's trust is real. And Boeing's not just a company, it's part of US national defense. Yet its military production now risks border delays and political interference. The Pentagon's worried. Congress is asking questions. Can Boeing even meet its defense commitments if its supply chain relies on foreign parts? While Boeing scrambles, Airbus charges ahead. Canada diversifies. Europe invests. And the US? It's isolating itself with protectionist policies that are crushing its own industries. America once built the skies. But if this keeps up, the world may no longer look to the US for leadership, it'll look elsewhere. If you found this breakdown eye-opening, hit that like button, subscribe to the Untold Compass, and drop your thoughts in the comments. Share this video, because the real cost of these policies shouldn't stay untold.